silver and gold. What's causing this rally right now?
Difficult to understand why things were happening.
And Sreekumar, you've spent 19 years in equity markets now. You must have seen a lot of cycles, a lot of ups and downs.
So much to learn, so many changes happening. Your refrigerators can get cheaper, your ACs can get cheaper.
So you're saying a healthy market is where you see both ups and downs, right?
Absolutely.
Hi everyone, welcome to another episode of Behind the Portfolio brought to you by Lemon, the investment app. Today on our episode, we have Mr. Sreekumar Menon, an equity product specialist from Nippon India Mutual Funds, who has over 24 years of experience across banking and across capital markets. So, welcome, Mr. Sreekumar. Thank you so much for giving this time to us.
Thank you for having me.
And you've spent over 24 years. And you started as a banker. How did you make the shift from banking to equity?
So it was like when I was a banker, I had a lot of my friends who were part of the capital markets. We used to very regularly talk about capital markets. You know how interesting it is. It was very fascinating. So
So, did
many
you
aspects.
self taught yourself first and then made the shift?
Yeah, so I think I started in that manner. So it was a lot like it was inquisitiveness. It was a very dynamic industry at that point of time. Though, frankly, when I joined the mutual fund industry, probably in 2005, the AUM was roughly less than 2 lakh crores, and
Wow.
today as we talk it's almost 75 lakh crores. So you can understand that it had been a journey, but when I started it was more of fascination towards how dynamic this industry is, so much to learn, so many changes happening. So that actually attracted me, pushed me towards this industry.
And since then, you've spent about 19 years at Nippon itself.
Yeah.
How's that been?
Yes. So I think I'll give a big credit to the culture of the organization. In fact, I never realized the number of years I spent in this organization. Every day was a learning. Every day was a different experience. Some things which you enjoyed, and in fact, it was not just me who has spent such a almost 2 decades with this. Like my CEO, he has spent more than 2 decades. My CIO equity, he has spent more than two decades. My CIO fixed income, he has spent more than 2 decades. Even our CBO, Chief Business Officer, even he has spent more than. So it's like I think it's more to do with the culture of the organization, giving the employees a good space to work in, and I think that it was never a challenge per se. Every day was a journey, beautiful journey which we go through.
Nice. Okay, so starting off, first things first, we saw the market react pretty badly to the budget on Sunday. Apparently, it's one of the worst budget days for the market in 6 years or something. What's your view? How do you? What was the STT shock like? What is your view over there?
So I'll actually divide this question into two parts. One is how the markets reacted, and second is the budget in itself. So probably the way the markets reacted, I think it was more of a reaction, and you could see it was an immediate reaction to the announcements which were made in the budget, and eventually the very next day you could see the market recovered whatever it lost on the day of the budget. So now, why this reaction happened? So a big reason which is being mentioned is that STT hikes were considered to be one of the biggest reasons. But I think it's also to know that the understanding of the budget actually varies. Like for example, a budget is always a document where the government tries to show where its focus is, how is it going to manage the spending for the
Yeah.
entire year, which are the core areas where they want to. It's more of a directional budget, which technically happens. Um, so for like example, I think as far as the budget goes in, personally I'm very happy with the way it was very clear directional budget, where
Mhm.
government has committed close to more than 12 lakh crores worth of capex spend, or probably they also said they are going to incentivize or give tax breaks to companies which will be investing into cloud or data center, etc. So these are very clearly directed towards using the opportunities which is around us. Like currently AI is a big story which is being played out, and
Mhm.
the government of India definitely wants Indian companies to be a beneficiary of this change happening, and that's exactly what ideally a budget needs to be. Like for if I have to just explain it a bit more, like in 2020, the government of India introduced the production linked incentive scheme, PLI scheme, which we call about. the it was basically to encourage exports from India,
Yeah.
manufacturing and exports from India. So if I have to take one company, let's say Apple, which produces iPhones, iPads, etc.
Yeah.
So the overall the 2021, I think they exported goods worth 8,800 crores, and in 2025 that has now grown to close to 2 lakh crores. So
Wow.
that's the amount, that's the vision which the government had laid down probably 5 to 6 years back, and you can
Mm.
see the type of things happening. So this is exactly what is expected from a budget from the government, what they are supposed to do, and we are very happy the way the direction is being introduced. Yes, the local expectation is that you'll get some breaks, tax breaks into budgets, or
That's always
certain.
a dream for a
Yeah,
salaried.
and also there's a lot of like goods can get cheaper, your refrigerators can get cheaper, your ACs can get cheaper. That need not always be a part of the budget. In fact, the last budget there had been quite a good amount of incentives which was rolled out by the government, and I think they're doing a decent job as far as managing the fiscal deficit, and in such a, actually I should say, managing this in such a difficult scenario when globally you're seeing multiple economies are in a difficult phase, and I think India as an economy has been doing quite good in this space.
You mentioned the PLI scheme, which relates to exports. And speaking of exports, the how is the US India trade deal, which is currently in the news all over? How is that going to help us? How is that going to help exports as well as the stock market in general? How's what do you envision?
So currently, as we speak, we have very limited knowledge as to what the fine print is all about. We have
Yeah,
just heard about the announcements that there's going to be Indo-US deal. So to
yeah,
start with, I think sentimentally that it's very good for us. I mean, so the entire last year we were discussing about whether this deal might happen, may not happen, etc. So I think that one good part is now that is behind us. It is for sure that after European Union, US, which is the second largest trade partner with us, we are having a
mm,
deal with them as well. So sentimentally, is really good, and I believe most of the concerns from both parties, both from the US as well as from India, is being taken care of when you are negotiating the trade deal, and after that, these announcements have happened. But to go more deep into it, probably we should wait for the final print to come in, more details to come out from the trade agreement. But at least this gives a good confidence level to the markets, to the investors, that at least one big hurdle is now behind us.
Srikumar, you've spent 19 years in equity markets now. You must have seen a lot of cycles, a lot of ups and downs. Is there any specific one that is memorable for you, which you'll never forget, or which has taught you the most?
So I think the 2008 subprime crisis was I think I learned a lot during that period, because prior to that, as you would know, that 2003 to 2007 was a dream bull cycle,
Yeah,
and as investors or as a part of a mutual fund industry, we all had started believing that nothing wrong can happen to the industry. So everything was good, you could see only greens all around, you could see only good news is being floated around, and when one fine morning when you wake up and you hear that Lehman Brothers, at that point of time, which was one of the most respected banks, had collapsed, and then it was very difficult to understand why things were happening, because none of us actually anticipated anything of that sort.
yeah,
And I think that period was a big learning period for us, as to how things happen, and that also grounded us that making money, investing into markets is not easy.
yeah.
If investing to markets, or making money out of markets would have been so easy, we wouldn't find any industrialists today working so hard to make their companies do well. So it's all about, it grounded us, it taught us that for everything you need to have a very balanced approach. And
Hmm.
I think this event, I should say, was one of the biggest learning experiences for me.
So you're saying a healthy market is where you see both ups and downs, right?
Absolutely.
Where do you personally invest, by the way, Srikumar? What's your investing journey been like?
So I'm completely into mutual funds.
Okay.
So, and I should say my first SIP when I started, I was a banker those days, and I did it just to help my friend do his
was that?
monthly
First
targets.
SIP. How
Sorry.
much was the first SIP?
It was a 500 rupee SIP which I started with, and I think I can't thank my colleague enough for forcing me to start with that SIP. And once I started the journey, I was more intrigued to understand what happens, how it happens, etc. And I think the rest is history. It has been a beautiful journey with investing into mutual funds.
What's happening with the rupee right now? It's falling more and more, week on week. If you could tell us what's exactly happening to the rupee.
Yeah, so see, to start with, if you see, rupee had always been a depreciating asset against the dollar. So if you ask someone who probably had converted Indian rupees to dollars a couple of decades back, he would have told you कि it's the valuation has doubled now. You know what you're paying for against a dollar, you're almost paying double of what you used to pay 20 years back. So that's
Yeah.
not a new phenomena that rupee had been depreciating. Now, of late, what had happened was, we have seen a very steady outflow of FI money moving out of India, and
Hmm.
that puts an additional pressure on Indian rupee. At the
Hmm.
same time, the support system which we have, like for example, the exports gave some cushioning to the rupee
Hmm.
to steady against the dollar, etc. We haven't seen that type of growth, especially because of this all this tariff war, etc., which is being happening. So that had put some additional pressure on the Indian rupee. Now, as we saw, as soon as the Indo-US trade deal was announced, suddenly there was a change in the sentiments, and suddenly rupee has got stronger. So it's very evident that there was too much of pressure, and which was making the rupee looks weak. But I think broadly, the way Indian economy is poised and the way the Indian exports are picking up, I think rupee is in a very good zone right now. We have gone through some amount of depreciation, but I think it's a healthy thing. It's just that suddenly it has been a matter of discussion for quite some time, but
Mhm.
there's nothing unusual about it, and we could see the reversal happening with just certain news items floating around.
And what about silver and gold? What's causing this rally right now? What's your vision for it in the future? Is it a good time to invest or not?
So, if you ask me, we should understand why gold and silver are rallying if in the last couple of years. So, the point is that as far as gold goes in, so gold has been rallying, and there has been a lot of articles and discussions around it because central bankers have been adding a lot of gold. So, if you look at it, post 2020, they've almost doubled uh, the gold inflows. I mean, they have been buying almost double of what they had been buying pre-COVID season, if I would have to say. And one of the reason has been that de-dollarization is something which is happening. Now,
Okay.
why it has happened is very simple. That there was a point of time when dollar was constituted close to 76% of the overall reserve, which the central bankers used to hold. And so whatever we had been talking about, don't try to put all your eggs in the same basket. So they
Yeah.
wanted to diversify beyond dollars, and that is when gold, which is always considered as a safe hedge, people started buying gold. Central bankers started buying gold, and of course, when the demand grew, the prices also grew along with it. In contrary, silver had been in demand because of its industrial usage. So, consumption of silver has multiplied because of its usage into green tech and high tech. So, in both categories, silver has been in very high demand, and there has been a deficit. So, there has been a supply side concern as far as silver goes. The supply was not able to match up to the demand, and that's the reason you could see a rally happening in silver as well. So both have been rallying for different reasons. So if as far as investments goes in, I think I'm a very strong believer that asset allocation is something which every investor needs to do rather than taking a particular call on a gold or silver. I think a person needs to get his asset allocation done properly so that gold as well as silver should be a part of his portfolio
Very
rather than.
diplomatic.
But actually, that is, fortunately or unfortunately, that's the fact.
So
You
you're
need
saying
to
it
have
is.
this as a part of it. Yeah. So a diversified portfolio is something which you can have it like a multi-asset portfolio where you can have equities, you can have fixed income, and you can have commodities like gold or silver as a part of your portfolio.
And is this a good time to enter though, or is it has the rally been too much?
I
What's the
think
difference?
if there Yeah, so I think as see in mutual funds, how we are different is that we would not actually recommend a trading call that okay it has come down, so you just get into it.
Yeah.
The investors' approach has to be very clear that the investments are for a longer period objective, and for a longer period objective, you need not look at the very recent markings. So if
Mm.
gold and silver is a part of your asset allocation strategy, you need not actually try to time it. You just stay invested, go through the cycles, and eventually you'll see your money giving you very decent returns.
We spoke about the rupee, gold, and silver. What are the different sectors that you keep a lookout for? What what should what do you think are the next best sectors to catch on to?
Sector wise, I think broadly, if I say, India is not a cheap market, so we are fairly valued at this point of time as far as valuation goes. But there are certain sectors where we believe we can see a good runway for growth. So one of them would be banks and financial institutions. So I think especially large private retail banks, insurance companies, I think we see a very good growth prospects, and they are fairly valued at this point of time. So that is one sector where we believe there are opportunities. Another big sector where we are seeing some good opportunities picking up is the consumption side. So as you see, we have a huge demographic advantage of close to 1.4 billion people in India. Now,
Hmm.
how this pans out is that post 2025, that is budget, what we saw, there was a clear indication, as we were talking about the budget earlier. The government has very clearly indicated that they are looking at boosting consumption,
Hmm.
and so we could see interest rates coming down by close to 1.25%, close to a good GST rate cuts which was happening, and a very clear indication from the government that consumption is one space where probably which can also, along with government capex, something which can actually push development in India. So we think that is one aspect which is very fairly valued, and we are seeing a good growth prospectus. And also the another part is power utilities, where we
Power.
think a lot of power and utilities. We think it's fairly valued at this point of time, but there's a huge growth opportunity there because the consumption of power, I mean the demand just keeps going up. you
Hmm.
you can see the heat wave which comes in. You can see and India's renewed focus on manufacturing industrialization with all these data centers, AI driven, this consumes a lot of electricity, so there has to be a lot of investments. And in fact, government has already rolled out a lot of very aggressive targets as far as this segment goes in, like close to 500 gigawatt of power generation in renewable power generation by 2032, and as we speak we are just generating about 200 gigawatts. So that is more than doubling the requirement in the next 5 to 7 years. So be it renewables or be it even nuclear energy, currently we are generating close to 7.5 gigawatts of nuclear power, and government has taken a very aggressive target of 100 gigawatts by 2047. So I think a lot of investments will be happening into this segment.
Especially for beginners, right? Like those who are just starting out their investment journey, like small caps is probably the most scariest thing to do if you want to put all
True.
your eggs in one basket. What investment advice would you like to give to someone who's just starting out with this with their investment journey?
So I think investment. Someone who's just starting with the investment journey, I think firstly they should realize they are extremely fortunate that they are born in India at this period of time when India is in a super drive. So we are among the large economies. I think we are the fastest growing economy, and we are
Right.
expected to continue with the same manner for quite good number of years going forward. So to start with, first is for a new investor, always start your investment with a goal, and the goal
Hmm.
could be anything. It could be like owning a high-end mobile phone to owning a high-end car or a home for yourself. So first have your goal set, and accordingly you start planning your investments. So a mobile phone could be a target in the next couple of years, whereas a home could be targeted probably after 10 years. So you have your goal set, and then be very disciplined when it comes to when you start investing. Like be regular investor. Don't
Hmm.
try to time your investments much depending on the markets, because markets can be really can surprise you at multiple levels.
Sometimes.
like this weekend itself, like on Sunday, as you rightly said, we had probably the worst budget day markets in 6 years history. But on Monday, it just recovered all the losses which it had made. So rather than trying to time the market, be disciplined, stay invested into this. And probably the third part which I would want to add on is that it's very important that they know where to invest and how much to invest. So today we have so many financial calculators which are available, which gives them an idea as to how much they should be investing to meet their goals. So
Hmm.
they should actually use these facilities, try to understand that if they need to reach this goal, how is it possible? How do they plan their finances? And then invest accordingly.
We have a couple of rapid fire questions for you if you're ready.
Sure, I'll try to address them.
Okay, first one. Lump sum or SIP? What's better?
Both. So SIP keeps a discipline, and lump sum whenever you have that extra money to invest, depending on what would help you reach your goals faster, you should keep deploying them.
Okay. Growth stocks or dividend stocks?
I'll prefer a growth stock so that it would help you reach your goals, unless you have your regular requirement of cash flow, which you are trying to adjust with your dividend on your dividends or investing in those dividend stocks.
Mutual funds or picking stocks individually?
Mutual funds.
Hmm. Okay. Gold or silver?
I think, as I explained in the previous thing, I think both should be a part of your portfolio.
Credit card or debit card?
Credit card, if you know how to use it wisely, and if you are not aware of it, stick to debit cards.
Okay. Buy a home or rent it?
Buy a home if you're going to stay in that home, or else you have much better investment avenues available.
Nice. All right. That was the end of our episode. Thank you so much for your time, Kumar. Any parting words?
Probably I'm just repeating myself, but as I said, I think everyone, and especially the new generation, should consider themselves to be extremely lucky. They are born at this part of the world in this time, because we are
Yeah.
seeing so many positives happening around us. We are not just the fastest growing economy. We are like probably the youngest country in the world. The world is looking towards India. This is actually the time when probably the world is more bullish on India than probably we are. So if you have not started investing, you should start investing. You should actually ride the wave. You should participate and make money for yourself.
Great advice. Thank you. Thank you so much for your time. And for our audience, I hope you liked our episode. If you did, please like, share, subscribe to this channel for more such content. Thank you. Thanks, Kumar.
Thank you.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.